10-year treasuries are at levels we haven't seen since October of 2023. But are we staring at 8% interest rates? No, we are not. And we're going to dive in a little bit of why that is and all the headwinds that are keeping interest rates elevated. Look, the MOU is behind us. Trump today said, hey, I don't want to extend it. So what does that mean? And once again, no one knows. We are in a level of uncertainty. We're in month 7 with regards to this conflict. It looks like Iran, in my opinion, is trying to stall, create more havoc with regards to midterms, and it looks like they are trying to play the long game. On the flip side of that, you have a president that is saying, we'll just shut down the strait. We will put so much financial pressure on you, and if necessary, we will militarily go in and take care of what we need to. But we've been hearing this rhetoric for quite some time. So our eyes need to be on everything else that could affect interest rates. And what are those? We need to get inflation continuously coming down. We need to see kinks in the armor of the labor market, and we need a Fed to change from hawkish to dovish. Today, we're looking at oil hovering around $85 a barrel. And I said it before, as long as it stays above 80, that is room for concern, because what it means is the potential of inflation being embedded. So who am I? My name is Kevin Weedmark, a.k.a. the Mortgage Mouth. Each and every day I come to you with what happened in the marketplace, how it affected interest rates, and should we float or lock? So let's talk about really quick bank spreads. And that's the real reason why interest rates are lower today. Today we're sitting comfortably around 2. Historically, the lowest have been maybe 1.6, 1.7. So those bank spreads is why interest rates are where they are. And given all the turmoil that we have to be very thankful for them. And that's why I believe once this conflict gets behind us and we move 6 to 12 months out, we are going to see interest rates back near the 6% level to high 5s, depending on your credit. So float or lock, I'm in float mode. I get this conflict is in limbo, but I'm hoping dips will come with rhetoric. And then we would jump on those dips if necessary to lock. And if you have to lock, as always, make sure you're talking with your mortgage professional about yield spread premium, utilizing that to offset closing costs, create more affordability for yourself, and put yourself in the best financial position to refinance in the future. Any comments? Please let me know. A topic you want covered. Love to hear it. Talk to you tomorrow. Until then, stay safe out there, y'all. Cheers.